Good morning, everybody. I am Sheila Sutton. So, what I want you guys to do, how many of you guys have ever thought about finances or money? Am I going to make enough money? Am I going to put it in the right place? Anything like that? So, you guys have some questions. A lot of people have questions? Who has questions? You have questions? So, my job is to educate you and to help you come up with solutions. So, as I said, my name is Sheila Sutton. Prior to coming into the financial industry, I was a nutritionist for 35 long years. I loved what I did, but at the end of it, I was getting just a little bit. You know how you can be in something so long you just get irritated with it? I was just burnt out. At the time, and I'm telling you this because I want you to know, I want you to relate to who I am so that I can relate to you. I didn't come into this with a person with a whole bunch of money and a whole bunch of everything else, right? I didn't. I was probably just like you. I was 57 years old. I am a mother of 4 and a grandmother of 6, and I always did everything to position my family. In my industry as a nutritionist, I helped people, whatever it was, nutritionally, looked at a lot of medical records, got with the doctors, made things to help them get better. So it was easy for me to transition from nutrition to financial because I'm just solving solutions, solving problems. When I came into this business, I had 0 money saved, 0 life insurance, 0 credit cards, 0. I believe that if you got the money, pay for it, don't get into that credit card thing, right? So that was me. So 4 months into the business, God spoke to my spirit, walk out of corporate America. I had just gotten into business, had just had surgery, replaced my income part-time, just 4 to 6 hours a week. I replaced my full-time income as a nutritionist, something I had been doing that for my career for 35 years. So I said, okay, God, let me just stepped out on faith because God spoke to me. I want you to cure financial cancer, predominantly in the African-American community. Why? Because they're saying that by between 2045 and 2050, the African-American dollar is going to be extinct. And I wasn't going to let that happen on my watch. So I'm going into a lot of industries. I'm not looking for the rich, the poor. I'm looking for people just like you and I. We're trying to make it in this world, right? We don't want to keep robbing Peter to pay Paul. We want to have some substance to know what to do with our money. And the problem is that we don't know what to do with our money, but that's what I'm here for. So I decided, well, if I'm going to do it, let me do the whole job. I had licenses where I was, but I got a new set of licenses. At age 57, who the heck walks out of their corporate America job, their guaranteed income, right? To step into something that's commission-based, that's driven by the people that you bring in, the people that you can help, because sometimes it can be a time in the holiday time, people want to buy gifts. So they're not talking about life insurance. They're not talking about investment. They're not talking about legal protection. They're not talking about homeowners insurance. They're not talking about buying houses. But my decision was to help people to position themselves. And I want to do that by helping you to know that you have somebody. Most people, the reason they don't think about it, because they don't know anybody who does it. They don't see people like themselves who can help position them. And I'm not being racist or anything, but if you got me, an African-American woman, and a Caucasian man, most people are more than likely listen to the Caucasian man because they think they know everything, right? But why not position yourself to work with somebody who's going to help you? I know where you're going through. I know what you want to achieve because I can identify with you. That's the beauty of what I do. I am one of the few African-American females that's completely investment licensed. And that's a big deal. In our company, our African-American people, we make a 55% of the income growth in a 48-year-old company. Isn't that amazing? So during the pandemic, we positioned ourselves because we decided, wait a minute, we don't have to set up for something that's just, why should we just get $10,000 worth of life insurance? Why can't we invest? Well, that's not what the value of my life is. I want you to understand that the value of your life and your family is worth so much more. A lot of people think about things like life insurance as, oh, well, it's just when I die, so leaving something behind. No, it's not. It's about leaving a legacy. The Bible said you got to leave a legacy for your family and your children and your children's children, right? How many of you got families? How many of you love your families? You would take a bullet for their family, right? Well, do you know that in the absence of you and your income, your babies, your wives, everything, they not only lose you, they lose that income that you're providing, right? So it's all about, I don't ever talk to people say, hey, you need life insurance, everybody's gonna die, you need life insurance. I never do that. You know why? Because if it's not a value for them, then why am I gonna push them to do something? So I need to create value. If I sit down with a family, I'm asking the husband or wife, if your wife was to die today, how much of the income would you need for you and those babies to be okay and for that house mortgage to be paid and all that? Then I turn around to the wife, how much of your husband's income will you and the children need? I'm all about educating y'all. That's what I'm out. It's about a transfer of wealth, because life insurance is the first line of generational wealth. I'm gonna talk to you guys about a lot of things that we do. I got life license, investment license, and mortgage on originating license. We finance it. So I'm going to talk to you about what we do, some specific things. Our company is Primerica. So under the financial realm, there are different things. There's life insurance, there's homeowners insurance, there's renters insurance, there's mortgage, being able to get a home, buy a home. I educate on getting you ready to position you on every step for the home, and we get you a guaranteed loan. We do a guaranteed letter. So we position you. I'm working with you because I do a financial analysis and assessment with every person I sit down with. Now, I'm just giving you guys an overview, and the reason the forms are there is so you guys can fill out information and tell me what you need. I book personal appointments. What I do is free. I'm doing personal appointments. I'm locking arm in arm with you to help you achieve your financial future in every area, whether it's to buy a home, to have effective life insurance, to have money to invest. Because guess what? Working is not the only way your money works. You can make money by investing your money, and your money is in the market because you're pooling it with others' money and you're buying interest into companies, and your money works for you. Only thing I'm here to do, I'm going to help you sit down and think about that, and we're going to weigh the options, because what I want to see is for your money to make money, to do what you want it to do, for you to look at the risk tolerance and what it's going to do. Because when we invest, we don't want our money to lose money. I mean, yes, we may lose some, but we don't want to lose a whole lot. I was on a Zoom the other night. This guy, he had just did his first annuity, and his first annuity was $1 million annuity, and it paid him $17,000 in one night just by positioning that man's money. And why did that man come to him? He had a 401k plan. He was in retirement, and in the last quarter of the year, the last 4 months of the year, his money, his 401k that he thought was safe, lost $500,000, $500,000. So what did he do? He panicked. He moved all his money out of there and put it into a money market in a bank. That's what he did. So I'm going to educate on, well, money market is good, but don't move out of a qualified, which is a 401k, or those are retirement plans, and those plans at work. Those are what's called qualified, because at a certain point, at age 72 and a half, the government wants their money because they never tax that money. So and then if you move it, you got 60 days to put it back in qualified, because if not, you're going to be penalized. They're going to charge you a huge penalty. So my job is to help you understand all of that. Your money, whether it's in qualified and unqualified, if you're moving, what to do. So long story short, that guy who had lost that had that $1 million. He had lost 500,000. So in addition to that, he had another 700,000. So he just positioned his money. He put it into a shield account. A lot of people, I heard people ask me about annuities. Well, annuities are very structured and suitability is important. You can't just put your money in an annuity. You got to have other money so that you can't touch it, because in the first 3 to 4 years, that if you pull your money out of an annuity, you're going to be heavily penalized. So he put 1 million in a shield and another 700,000 in another investment product, so that he was able to get money out each month to satisfy that government thing and still have his other money locked down for 6 years. At the end of that 6 years, you know how much money that annuity is going to grow to? $2.5 million. Is that a good thing? Absolutely. So that's what I do, is I help educate to position your money to where it's making the most for you. Our company, this is our slogan: how money works. Several months ago, our lawyers had to go to bat because everybody was saying how money works, how money works, how money works. Well, we're a publicly traded company. We're regulated by FINRA. We want to make sure everything is right. So we had to go, because this is what Primerica has been from inception, how money works. So we had to fight for, and now what we have is called the real how money works. You can scan the QR code. You can go in addition to this, you're able to register on my site, get everything you need to know about money and how to position yourself. We also have a how money works for children. But the reason we do how money works is because people don't know how money works. We want you to know we go through everything that you can possibly go through. We help you take control of your money. We talk about paying yourself first. It's important to pay yourself first, right? You should pay yourself about 10% of your income, because that's you investing in yourself, because without you, you don't make any money, right? We talk to you about how to pay off debt. People have credit card debts and things like that. One of the things in analysis that I do when I do a complimentary analysis for everybody is I put down all your debt you have. I want to know what's going in, what's coming out, what's your minimum payment, what's your interest rate. Because guess what? In that analysis, I'm going to give you a plan to pay that off faster, so that we avoid all the interest, so that you don't. I'm telling people, don't get a debt consolidation loan. That's crazy. Why? Because you're just transferring that over to somebody else and you'll never get out of debt. So we give you the plan and we walk you through it. We talk about your savings, the rule of 72, how money works. Any interest rate you have, he mentioned he has a high yield savings account. So what it is that interest rate divided into 72 tells you how many years it's going to take your money to double. So based on his interest rate, it's going to determine how many years it's going to take for the money he has in that savings account to double. So we teach you that. We want to teach you. That's the banker's rule. People think that when they put their money in the bank is giving you a certain interest rate, but guess what? They're making more money off of you. So we just teach you to cut out the middleman by investing your money. Because once your money goes into the bank, you sign a rehypothecation agreement. That means the bank is going to loan your money out so that they can make money. But they don't pass that on to you. They're making money on your money, but they don't pass it on to you. How many of you feel like that's right? Is that fair to you? But guess what? It's legal, right? And you sign an agreement. So we just educate you about where to do it. Some of my people, I may tell them, don't put it here, but leave this much in a high yielding savings, but make it sure it's a high yielding savings. Or I might just say, let's just put it in a money market over here. It's not in the market, but guess what? You're going to make more by being in a money market with us under the investment side than in the bank, because it's going to yield. I have a lady who puts $500 in her money market every month. And every month, like clockwork, that money market makes between $16 and $25, like clockwork. Now it's her money. It's pure money. It's not invested in the market, but it makes money every month. Even if she puts nothing in it, because she stopped her investment for like 4 months and her money still continued to make money. That's how we position you. So I'm going to talk to you about, I will show you how to be an owner and not a loaner. be an owner and not a loaner. You're going to own what you need, what you have, and not always be loaning people out or having people take from you and stuff. Invest with precision management. I'm going to teach you how to make the right investment decisions. And I'm going to partner with you every 3 to 4 months. I'm going to meet with you and say, let's look over your plan. Let's see where you progress with. It's kind of like we're going to be arm in arm and I'm going to hold your hand. It's your money. You're not paying me for that service, but it's my job to help you achieve your financial goals. Can anybody use a financial advisor? And then when you guys get out on the road and you're making money, what are you going to do with all that money you make? Did he say, you know what? I'm okay with you saying that. She said, spend it. And spend. There's nothing wrong with spending. But let me say this. Would you spend it all or just a portion of it? Okay. Because you feel like you deserve it, right? Absolutely right. You deserve it. You worked hard for it. So what do you, after you spend some of it, how much are you going to spend? About what percentage? Half? Wow, half. Is that going to be half every time you make it or just the first time? Probably the first time. Okay, and after that, what we're going to do with it? Save it. Or we're going to save it or invest it? Okay, I'm going to show you. I'm going to show you. This is, I've heard this said, poor people save, but rich people invest. Because guess what? You're investing in something. What type of water is that you're drinking? Huh? Electrolyte. Okay, so you drink electrolytes all the time? Okay. What else do people drink all the time? Anybody else drink something every day? Water. What else? Name brands. Coffee. Okay. Celsius. You like that Celsius, huh? It's like crack, isn't it? My daughter likes that Celsius too. And it overworks your heart, so be careful with it. It will overwork your heart. So let's say electrolyte Celsius. I'm talking purely investment. I'm trying to just challenge your mind on the savings. Savings, you're just saving. You don't know what's going on. It make some money. Invest it. Okay, so you like electrolytes. He likes Celsius. Let's say you put your money in a stock, and in that stock, you have some Celsius in there, you have some electrolytes, you have some Kellogg's, you have some Caribbean, you have some Apple, you have some Google. You got a lot of stuff in there, right? That's investing your money. Because that means every time you buy electrolytes, every time he buys Celsius, you're making money because you've invested your money. Now, do you understand? Every time somebody else buys it, you're making money. That's invested. People think they got a lot of money to invest, that they need a lot of money to invest. If you go to a company like the ones that we deal with, Franklin Templeton, Invesco, Fidelity, any of those companies, you go into sometimes you see the Fidelity in different places, brick and mortar, which is a building like this. The least amount that you can start an account with them is between $10,000 and $25,000. And you also have to pay that person that's managing your money. We're mainstream America. You can start an investment account with us for as little as $25 a month. And then you work your way up. That like easy or what? And you're investing in a mutual fund every mutual fund has anywhere from 79 to 85 companies within that one fund. Number one, your money is not all in one stock, so you're not losing. It's diversified and it's pooling with other people, and you're an owner of the fund. No, the S&P 500 is a system. It's like most of them base it on against the S&P 500 and all those. It's not a mutual fund. It's a indexing system. But we pace against that. Some pace against S&P, some pace against the Russell 500. So no, but that's a good question. S&P 500 isn't a mutual fund. It's an indexing system. Yeah. That's what a lot of people look at when in the New York Stock Exchange. But that was a good question. So anybody got $25 to start investing in your future? See what I'm saying? So we make it possible for middle stream Americans who don't have a lot of money to start investing. Because guess what? If I'm starting you out with $25 a month, Let's say you're on the road, you're driving, you're truck driving, you're making some good money. Because my daughter-in-law, my stepdaughter, she drives trucks, and she makes a whole bunch of money driving trucks. And she say, man, she makes some money. She say, I can invest a whole lot now. I help you start out low, and then as you get more, then we talk about it and decide where we're going to be, because I'm going to look at everything, your household, your children, everything. And what can you comfortably set aside that you don't have to tap into? So I'm going to help you learn to get to where you're investing more in yourself, because that's actually what it is, investing in yourself. Assets and liability. So she said she would go out shopping. What would you shop for? I'm going to talk about it.
Clothes, shoes,
Any vehicles? Any vehicles? Okay. So liability, buying insurance, clothes, shoes, and then she said fix up the one she has. Now liability, cars. I would tell people, don't just rush out and get a car. If the one you got is good, hey, I know a millionaire in the company. I see him next weekend. He say, I'm gonna drive a car till the wheels fall off. Because we gotta be smart about it. As long as you keep up the thing. But a car is actually more of a liability, believe it or not, because they depreciate in value. An asset, mutual funds, gold, things that have value is an asset. Rich people, remember, rich people invest, poor people save. Asset, investing in yourself. Maybe you have a couple of homes that just became an asset because you can rent it out and make income. It's an asset. So when people say, oh, well, I can't afford life insurance. Why? It is an asset. It's a transfer of wealth. I can't afford to save in a mutual fund. Why? It's an asset. It's going to appreciate over time and bring you money in. Assets. Liability are things that are just low. You're not going to get a return on a liability. It's more of a detriment than anything. So let's talk about, do you all feel that it's important to have a will? Who feels that it's important to have a will? So a will. What about, how many of you have a house? How many of you have wives, kids, families, whatever? All right. So how many of you have multiple children? Okay. Multiple children and have a house, and all your children are grown. Okay. So let's do this little scenario. Let's say you have a house. You made sure everything was good. You may feel like you don't have a lot of money or anything to leave, but you have a house, you have children, multiple children. Sometimes the kids get along, sometimes you don't. It doesn't matter. Family is family, right? So you don't have a will in place. You don't have a trust in place. You don't have a life insurance in place. All right, so no life insurance. Ooh, we may have to do a GoFundMe. How do you feel about that? We may have to do some fish dinners. How do you feel about that? So you got a house. You didn't leave a will. You didn't leave any directions, instructions for anybody. You're out there driving and it just happened unexpectedly. What's going to happen to your family? Nothing is in place. Nothing. Nobody knows what mom or dad wanted to have happen to the house. What happens? It goes in probate. Probate, which means it gets hung up in the court system. Nobody gets anything, and your family has to pay a lawyer to decide who gets what. I'm telling everybody, get a will. Get a will, get a plan, get something in place. 101 reasons why you may need a legal protection plan. Low cost, it's a plan. I have one. All four of my kids have one. They're grown, and I make sure they got one because I pay for them. Because I don't ever want them to be somewhere on the side of a road in an accident or nowhere and be in a position where you don't have anything. Case in point, my daughter drives for Uber. 6 months ago, she was hit from behind. She's been hit 3 times. She's sitting still. She's getting hit from behind. Her back is messed up. Last Friday, she called me, Mom, and she's crying. I'm like, what is going on? The lady, she was sitting at the stoplight, had just dropped the client off, and the lady hit her and pushed her into another car. Here she is with no vehicle, and she just got that car in February. She's got a lawyer for the other one, but now she's like, that's her means of, she got a lawyer plan though. She got a lawyer because they're going to advocate for you. So what are the things that fall into this plan? 101 reasons why you may need a legal plan. So I'm going to take some things, and if any of them applies, any of this applies to you, raise your hand so I kind of have an idea. You don't have an up-to-date will or trust. Raise your hand, everybody. You don't understand the difference between a trust and a will. You are tired of hidden cell phone fees. Your parents die and name you the executor of their will. You need documents reviewed related to your retirement savings plan. You receive a speeding ticket. Anybody? Nobody's raising their hand on that? Any of those? You are buying or selling a home. Anybody? You decide to change your name. You know, you got married, you divorced, but you want your name back. Okay? Your new washing machine doesn't wash. A friend is injured. A friend is injured. This is your friend injured on your property, and they say they suing you. A stranger calls and demands money or damaging information will be done. A hit and run driver damages your car. Okay? Your spouse claims a right of to your earnings. You have an accident driving your friend's boat. You have an accident driving your friend's car. You are denied credit for no apparent reason. You made a sizable gift to charity. Angry words resulted in a suit. Any of those things? Simple things, right? 101 reasons. Legal plan, y'all. Why? Because a legal plan will cover a lot. Every legal plan we have has a free will planning and free estate planning. All of mine are getting the preferred one, which is the middle one, which is $39 a month. But guess what? It's peace of mind. For me, I pay $39 a month 5 times. One for me and one for each one of those grown kids, because I don't want them to be devastated. And then if they say, Mama, I take that on, then I let them take it. But hey, I'm taking care of it because I don't want my children somewhere and something happens to them. I don't want something happens to my grandchildren. I don't want anything. I want to protect my family. There are fees, lawyer fees and everything, but it's like your discounts. So you're not paying full legal coverage if you have a problem. You have free estate planning. You have free will writing. Everybody needs to make sure their families are in order. So that's one of the things I do help you set up as well. Yeah, I'm going to pass a lot of this stuff out. I got scammed back in September, the week before my birthday, and my bank account was hit like boom, 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 boom. Whew, I had to call Chase, and I saw it the first time when it happened, and I called Chase. I said, I need you to lock something. I said, I feel like I just got scammed. I locked it down, and even after I locked it down, and it was like a ricochet effect. Let me tell you, Chase put a hold on my account for a month and a half. You know what? It's nice to not be able to access your money. I'm just saying, but that was designed to protect me because they wanted to work out all that. But I just had to come into the bank to get my money. I had money coming in. I had direct deposits, but they would hold it for 3 days before they allowed it to be available to me, just in case somebody was trying to hit in the back door. But then right after that, they told me just walk into the bank. They sent me a new card. I had to go into the bank, and then they transferred everything into the new account. People say cash is king, but do you know if you want to buy a house, you need credit? If you want to buy a house, you need 3 revolving credit accounts. Yeah, you need, and the key is when you get a credit account and you use it, you need to keep your utilization less than 30% on your credit, and then just pay it off each month. And that's why your credit score. So if you want to buy a house, you need revolving credit. Remember I said when I started this, I had nothing. Guess what? When I started listening to what my friend who fixes credit said and using all of her tips, my score went way up. You know, so cash is good, but to buy a house, you're going to have some credit as well. They look at your credit worthiness to buy a house. So, and we just kind of advise you on what type to get. You don't have to get a big one. You can just get something to start, you know, because you want to have something on your credit report. No credit is worse than bad credit. So, I mean, you got to just kind of trust somebody. That's all it is. You got to trust somebody. I'm just saying. So let's say you got a credit card, $500, and in order for your score to keep going up, keep your utilization less than 30%. And let's say like I got this one credit card that I use all the time. I pay it, and there's an automatic draft that comes out to pay it on the 20th of every month. But if I use something and get almost to where I'm maxing it because I had something where I was, guess what? The very next week before that automatic draft come out, I'm paying that part, almost all of that off. And then they ask me, do you still want to pay that automatic $50? Yes, I do. Because as I do that, it's reported. And make sure you do it because there's a specific day in every month that it reports to your credit. I would say look at the date that they're going to report to the credit company, and 2 days before that, make a payment to where it brings the utilization down. It doesn't have to be a full payment, but make sure it's more than the minimum payment. A lot of people, they have credit cards, they make the minimum payment. In the analysis that I do, I show you that just by making the minimum payment at that interest rate, you're going to stay in debt a long time. So I have them accelerate their payment, make more than a minimum payment. You're staying there because irregardless the minimum payment, they're going to charge your interest rate on that. So get it all the way down to less than 30%. A lot of cards, the minimum payment is like $30 or $35. Make a $50 payment. You know what I'm saying? It's going to make it way better. And just like people who have houses and you have your mortgage, do you know if you make 2 mortgage payments a month, it accelerates you paying off your mortgage way quicker, almost 10 years quicker. Pretty good, huh? Your number one, paying it off early, and number 2, you're avoiding all that interest because that interest that's saved, that's money you've paid that bill off early. That's money you can now invest and have your money work for you. And you know, that's what it's there. You use it when you need it, but then when you start making your payments, make extra payments because then that's what brings your score up. But the lower your utilization, the higher your score. But if you're paying it back before the reporting period, then it reflects on your credit report.